Federal Reserve did not change its benchmark interest rate on Wednesday. It will stay between 5.25% and 5.5%. That range, the highest in more than 2 decades, has been the same since July of 2023, part of 11 rate increases over the last 2 years, meant to slow economic growth to bring down inflation. Though Fed officials entered the year thinking inflation had been tamed sufficiently to warrant 3 interest rate reductions, data this year cured them of that optimism. Federal Reserve Chair Jerome Powell predicted only 1 rate cut this year, saying, quote, "The economic outlook is uncertain. We remain highly attentive to inflation risks." Also on Wednesday, the Labor Department says inflation rose to 3.3% since last year. That's lower than expected and down from April. For more on this, let's bring in Ben Casselman. He's an economy reporter for the New York Times. Ben, good to see you again. Let's start with inflation before we get to the Fed. What do you make of this inflation report, and how do you think the Fed sees it?
I mean, look, this was unequivocally good news that we got today. Consumer prices didn't rise at all in May compared to April. They were up 3.3% from a year earlier. This was clearly progress. It was better than economists had forecast. It comes after several months of not so good news, right? And so the Fed is certainly being cautious. It doesn't want to declare victory here. But they've been saying that they want to see clear evidence that we're moving back towards this 2% target for inflation. And today's data was certainly a step in that direction.
People often cite high food prices among their inflation concerns. What did you see inside the numbers on that point? Or was there anything else that sort of struck you inside this inflation report?
Yeah, and I think food is a great example of what we're sort of dealing with here, right? On the one hand, we had very good news today. Food prices, grocery prices didn't rise at all in May compared to April. They're actually down over the last few months. And even over the last year, they're up only 1%, right? This is not a big deal. Grocery prices are not rising that quickly now. But they're up 25% if you go back to the beginning of 2020. And so, if you're used to going and spending $100 a week at the grocery store, now you're paying $125 for that same set of food. And so the fact that, they came down a couple of cents here and there over the last few months is probably not, for most consumers, going to feel like a particularly big win.
And you've set the context there correctly. So let me ask you this. The United States and the world faced a once-in-a-lifetime, we hope, economic shock with the pandemic. So where do you think that story stands now? There was a huge shock, and now the recovery is happening. Where are we in that story?
Yeah, I mean, I think the question here is always sort of compared to what, right? If you go back to the very early days of the pandemic, when we were worried about just in addition to the obviously health crisis, the just catastrophic economic impact, millions upon millions of layoffs per month, right? And where we feared we might be, we are vastly better off than that, in part because of very intense interventions by the federal government. On the other hand, right, there was a moment where it really felt like we had kind of come through that scot-free from an economic standpoint, obviously not from a health standpoint. And then we got this inflation shock. And that has been, much more severe than certainly economists had hoped and than many people expected. I think that the writing is going to come down to sort of what happens over this next period.
Mm-hmm.
If prices come back down, or inflation comes back down, if prices stabilize without unemployment rising, with some stability in the economy, then I think we kind of come through this period and we say that was painful, but we sort of made it. If we don't, right, if prices pick back up again, or if unemployment takes off again, if we get that recession that's been talked about, that's going to really change the dynamic about sort of how we think about this whole period.
And finally, the Fed signaled 1 rate cut for this year. There was once talk that there might be as many as 3. Help us understand that. Is that a big miss by the Fed, or is it pretty much in keeping with the possibilities, because you can never have super precision on this kind of stuff?
Yeah, I mean, I think the Fed is in a holding pattern, and they've been in that for a little bit now. They're looking at the economy and saying inflation is still hotter than they would like, even though it has come down. The economy as a whole looks relatively solid, and so they see very little reason to go ahead and cut rates. they'd like to see inflation come down more before they do so, but they're also prepared to act more quickly. They say one cut this year, but that is by no means set in stone. If we started to see the economy deteriorate, or if we saw better news on inflation, then they could cut rates sooner. They could cut rates by more.
Ben Casselman with the New York Times. Grateful as always, Ben. Thank you.